Hey there, Jedi traders. David here of TradingFibs.com to bring you the weekly state of the indices. Today, September 20th, as we are ready to begin this week's trading action after FOMC and contract expiration quad witching, and rolling into the third week of September. Looking for some action here in the next couple months with indecision by the Fed as to the interest rate. Would have been nice if they had just given a little bit of a interest rate, but not ready based on global conditions. But regardless, we trade the trend, and that's what we look for every day. As always, please seek financial advice when trading with your money. These videos are for educational purposes only. Support your knowledge in the market. See what's going through my head on any given day or week. Always make sure you have a solid trading plan and always manage your stop when placing a trade. Let's jump right into the weekly outlook. We're going to go ahead and start with the Russell weekly outlook. Here on a 100-tick range chart, we are downside. 100-tick range chart downside. 4-hour T3 moving averages downside on a 4-hour chart. Here we can see on a 4-hour 51.44, we are still finding that support here at the 50-period moving average. So while the downside intraday, longer time frame, bit of a conflict here as we see the 4-hour chart finding support at the 50 and daily here in the 51.44 reject at the 50-period moving average. Here we see a Fibonacci retracement draw, unable to break above and hold above that 50% level and holding downside here at the 8-period moving average. And here in the weekly Russell, we could see price action on a T3 moving average crossover that's held up for several weeks now, and both that and on a monthly slightly to the downside, price action holding underneath, but still finding support at a former fib retracement or extension level. So while we have the bigger picture still upside, we got downside 1, 2, 3, and 4 with unable to break above the 50%, but watch that 4-hour chart. That's the only thing. We start dipping underneath that 50, this thing could still go down. What we'll do is we'll look here in a little bit as to market profile and volume profile as to where we sit in the big picture. Let's jump into the YM. YM on a 100-tick range chart, we can see we're headed downside. 100-tick range chart on the YM sitting to the downside. 4-hour chart again, downside. 4-hour on a T3 moving average, this is the 51.44, we are downside. T3 moving averages downside, and here we have the 51.44 unable to break. Monthly has now crossed downside, so all 6 charts, 1, 2, 3, 4, 5, 6, count them up, that's right, all in the red, plus a daily Fibonacci breaking below the 8-period moving average, finding a little bit of support here. That's right, finding a little bit of support. Let's take a look at what we're looking at here. We are most likely looking at a fib. We are looking at fib retracements here, not fib extensions. Again, here on the Russell, don't forget, I think we had a fib. Let me correct that. Go back here to Russell. These aren't fib extensions, these are fib retracements. So unable to break the 50%, and the YM similar picture here. 50% retracement upside, but still unable to break up any higher to 61.8, so still holding downside, but you got that 31.8 Fibonacci retracement. As soon as price action may continue down here, we'll go ahead and then draw a fib extension for certain given levels. So again, YM big picture is red all the way down, makes the intraday to the short that much more probable. NQ, looking at the T3 moving averages, a little bit of contrast here as the T3 moving averages have crossed on the 534, but the T3 moving, even though price action is underneath, the T3 moving averages haven't crossed down like you see here prior. That's right, here you see the T3 moving average downside, so thus the red colored background there. Alright, so bias up here a little bit mixed. 4-hour chart on the NQ still holding up here at the 144. 4-hour chart on a T3 moving average holding to the downside. 4-hour chart, daily chart here, 51.44, still holding downside, unable to break that 144. on a T3 moving average here on the monthly, still holding to the upside, and a weekly for a couple weeks here we've been holding downside, but again, price action on a weekly jumping up after several weeks down. So a little bit mixed across here. Monthly up, weekly still downside, daily downside, 4-hour downside, 4-hour kind of hanging here at the 50. This thing breaks underneath the 144 this week. We could see that continued downtrend, and then if we get underneath that 144, this is a guaranteed T3 moving average, and then the bias will continue. Here we could see the 61.8 bounce off the 50, 200, and now we're around the 8-period moving average, so hanging between the 61.8 and 50. It's probably going to take a day or two to get that confirmed downtrend, but right now leading towards that. ES, again, we're down here below T3 moving averages, 5 below 34. We have the 4-hour chart on 240, again downside. Price action on a 240 on a T3 moving average crossover. Again, the difference between these two charts are both 4-hour charts, but what we have here is the 50 and the 144, and then we have the T3 moving averages. So again, in sync here, downside, 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 and downside, all red across on the ES. Again, multiple retracements here. You could see the mess the ES is going through. Couple up days, down days, closing out daily gaps, but areas of confluence here you could see on the right here. You see 61.8. We have a couple 50% retracements. Here's the 38% retracement, and then the 23% fib retracement. So again, it's price action right now hanging around that 50% retracement area. Okay, taking all that, I think the big picture you all know is that we've been downside. We have some wonderful updates as we went into FOMC. We didn't get that interest rate hike, so you know, market can do anything. Quad witching over. We're all money in the new contract. Again, we'll have options expiry as we get into October. Regardless what your bias is, it doesn't matter either day. We can trade either direction. That's right. Trade either direction means, again, looking for that setup where you've got the sell signal. If we're headed downside, you got a sell signal with a crossover, with a solid hike in Ashi bar. Again, the bigger time frame on an intraday, this is a 1-minute bar down here. The 51.44, this is a 5.34, so when all things in red, even makes for a higher probable trade when you're in sync with the downtrend. If the downtrend on a bigger picture is red, the intraday pick is going to be even that much stronger with a trade to keep you in trend. Whether you manage this on the way down, bring your stop up to the pullback and continue downside, or you know, whether you exit the trade on the first green candle and then look for a re-entry. Here we see the NQ from Friday, 43.20 was a significant line, the Camarilla pivot, and you could see you might not have necessarily taken this trade. Hey, there's never a guarantee that trades won't go always your way. You gotta just make sure you have a solid trading plan, and always, like we said, manage your stop at least at the swing size. Guarantees you higher probability that the trade will work out than being stopped out if you kept it too close. So there's some two wonderful trades intraday after post lunchtime, sell signal to the downside. Now let's jump into the market profile, something we've been watching for a couple weeks, and we're going to end off here with something that we've been really focusing on lately, which is the volume profile. Again, time profile, very different from the volume profile as far as price action at a certain given time versus how many traders were at a certain price, how many people were buying and selling at a certain price, which actually much more reflective with the philosophy and trading strategy of the T3 moving averages. So here we see we started out the week September 14th as we head into FOMC minutes, which was on Wednesday, and then Thursday the results came out very, very fast. Price action on Thursday only to complete our price action downside. Now, our weekly opening price here on the Russell was at 1155. Price action again closed out the daily gaps. Here we go, 1170.6, 61. Again, the strategy here, or not necessarily the strategy, but traders, you have to understand and realize that again, open gaps always will get closed in the market. The market doesn't leave open gaps open, and eventually when they close them, they get closed and price action continues. Now, if the big picture here is we've had this run down in the market. Now we have these open gaps down here on the Russell here sitting at 1096.3. The question is, when's it going to close it? Well, I can't give you that answer. All I can tell you is that eventually it will be closed. Whether it happens next week, whether it happens in 2 months or next year. But hey, we run the market all the way up higher. That's just much harder for it to come down and eventually close out that 1096.3. So what would I rather see? Yep, I'd rather see that 1096.3 chop around here a little bit at the lows, and then eventually, that's right, let's go higher and close out the daily gaps that we're leaving above. For instance, here we left Thursday's open gap 1172.3 still open, and eventually on the market profile we will go ahead and grab that. YM we could see here on September 14th, price action again breaking here, opening price at the 16,332, and then price action breaking upside up here, closing out some previous daily, or actually this was Thursday and Friday's daily, Wednesday and Thursday's daily gap. Actually we had a previous open gap from there, so we closed that out, and price action coming down, leaving an open gap here at 16,542 and finishing up, that's right around the weekly opening price, almost a zero game for the week. Again, blue lines represented by time, TPOX, time, okay, market profile, and then we'll jump into the VPOX here in a couple minutes. Again, down 15,726 is the price action that we're headed down towards eventually. Whether we close that out next week or in 5 months or a year is to be seen. But there's our market profile for the week on the YM. Looking at the NQ, we can see opening price at the week 43.2750, and look where we finish it off. Yep, right there, 43.2750, leaving a daily gap right there. Closing out the daily gaps for the week, except here on Thursdays, 43.6625, price action downside, and then all the way down to 41.94. That is our lowest. That's right, with a TPOC right here, market profile down here around 41.75, that will eventually get closed out. So there is our bottom target on the NQ. As far as the ES concerned, ES all the way downside. Here we are finishing out, that's right, 1951.75, closing out the week, leaving a daily gap from Thursday up here at 1975.25, and looking downside again. Where are we headed downside? Well, we got 1921.75 and 1873.75. So yeah, my crystal ball, even though I leave it to the experts, I got a line there. 1873.75 is a line that we would definitely go in touch and close out, being that we have some open points of control and daily open gaps. Now, I said what we were going to do is jump in and a little bit of shift, a little bit of a philosophy change here. Again, I like looking at the market profile based on time, but when you look at the volume profile, much different setup here using the Sierra charts. Very nice, showing the representation in orange as the 70% of price or volume action on any given day. The pink lines here represented by the open points of control or naked VPOX. And you notice that, yeah, here on the Russell, what do we have? We have both upside action and downside action that eventually will get closed on any given day. The period represented here by 700 days, and so the mean right here down around 1151. And so we could see the same picture as we just did before, closing out a former right here, a former a naked VPOC right here around 1186.7, leaving some open POCs right here on the volume charts, with price action closing out here at around 1162.4. So again, how do we use this? We don't use it necessarily to trade off of, but to watch where significant open points of control and daily gaps that we've been watching on our other charts when they get closed. Again, each day price action on the outliers outside of the orange. You can use that to represent where price action typically fades back into value. But again, a nice contrast to the time versus volume. Volume where most price is holding out. All right, so there's our TF. Let's jump into the YM. YM, similar picture that we saw throughout the week. The mean here being at 636, price action hanging out there for a couple days and then gapping down. Our point of control open here 16,359 from Friday. Look at that, right down to the point of control that was back from Monday, closed out and back into value area. So again, you know, one of the options, or one of the nice ways to trade trend, and especially using the volume, is you see price action is running down here, right here to 16,251, closes that out. You take the long, you look for, that's right, you look for whatever, obviously market your trade. I'm just going ahead with the example, the NQ, obviously wrong direction here. So what we would have to do is find a buy signal back to the upside. But let's just say, for instance, this was here, the volume naked VPOC there, and then you get a crossover, a buy signal to the upside. That's right, you can jump right into the trade and take it back into value. So it's another strategy of trading the outlier on the volume POC. Now, NQ is a nice picture from Friday. That's right. Taking the trade from the high, taking the trade. Look what happened here. Price action, like we saw the similar price action for the week, closing out some former open POCs, and then leaving an open one here. The mean here around 43.60. No, I apologize. 43.69 is a different line. I don't recall what that is right now. Could be a daily gap that I left on there. We'll leave it at what it is right now, or else it was the. Yep, I'll just leave it. I don't recall what that line is. But anyway, point being is price action lifted through the week, and price action again right here comes up to the high of the session right here. All right, closes out that. Notice the open POC right there, which was Thursday's low. Closes that out. Take the short. What are you looking for in the short? Well, any similar setups. That's right. So on this being Friday's. Let's see. Let's scroll back here. This should be Friday's action. All right. So we go to Friday's action. We look for almost the high of the session, which was in the morning. Let me see back here. I don't have exactly the time here. Let me shorten this up here so we don't have to scroll too far back. And let's see. All right, perfect example right here. All right, so the high of the session being up here. All right, so what we're doing is we're lining this up. Here we go. All right, 43.6275. We come back to the volume profile. All right, that's right in line up there, 43.6275. All right, there it is, 43.6275, and then we had a VPOC at 43.5675, 43.5675 right there. All right, around that area, I jumped up a little bit, and what do we have? We have the crossover. All right, nice entry, or waiting for the obviously the sell signal. Again, this isn't the most beautiful setup where S and X crosses together, but we closed out the VPOC, and what do? We have a T3 moving average of 534 in sync. We take the risk of the trade, and what happened the rest of the day? That's right, market action ended up obviously coming all the way back into value here and closing out near the weekly opening price where we had finished. Let's go back to the Nasdaq. That's right, Nasdaq 43.2750, 43.2750. All right, and that was our weekly opening price. And what a ride down that would be from the VPOC, closed out. You had a T3 moving average crossover right there, crossover, risky trade. You don't have all planets aligning here. Sell signal about 6 or 5 bars down. You could have gone to a shorter time frame, wait for a pullback entry perhaps, and then ride it back into value. So just another trading strategy. Again, you can use in combination. I wouldn't necessarily trade right off the charts, but that's just an example. All right, and then wrapping it up, ES. Again, here we see a bigger picture of the ES. Price action, as we saw here in the long term prior, a lot of chop action, daily major swings back here in the month of August as we're just finding ourselves in this 61.8% zone on the Fibonacci retracement. What's even nicer on the any of these major indices, or whether you use this on any other future or commodity, is the ability to draw what we've come to know as what we call a micro view. A micro view is taking a certain number of days. Let's say we want to start back here. We see a lot of consolidation in this area. We go ahead and draw ourselves what we consider a micro view, and all of a sudden we get ourselves, that's right, we get ourselves a micro VPOC, which on Friday we essentially came down and closed out, and then price action back in the value. So another feature of the volume profile that allows us to draw anywhere based on what we believe or come to believe is a certain area of perhaps consolidation, and we want to see where price action may lead the next day. Here we go. We had an example of prior days there, and then what do you see only a couple days later? Excuse me. Price action on the 70%. The higher end of that actually matched up right with the POC from that area drone, the volume profile that we drew there. So anyway, glad to have this volume profile part of our trading plan now, whether you use the market profile for time or whether you use the volume profile to follow trends, or at least to see where open POCs are. Again, I prefer now the volume profile over the time. I like to see where price action pretty much held on a volume makes more sense to me. And again, I'm looking forward to adding this to the T3 strategy on an intraday basis by looking at those open points of control and watching for the T3 moving average to be in trend, maybe back into the value area, or at least out to the we can trade in both directions. Again, if price action is headed up towards a naked point of control, and I have a T3 moving average with a 534 in trend, taking the trade up to and hopefully hitting that point of control, and always managing my stop on the way up. All right, looking ahead at this week's big picture, we have a lot of Fed speakers on hand. Home sales on Monday. Looking at PMI on Wednesday with gas report, jobless claims on Thursday, and finishing out the week. That's right, star of the week is the GDP. As always, that concludes today's insight into the state of the indices for this week. Feel free to stop by at tradingfibs.com or any of my social media outlets. For instance, here at tradingfibs.com to obtain more information. My trading mantra is one simple strategy. Any market, any chart, any time frame will keep you disciplined. You can find me every day on Twitter at tradingfibs. And as always, I really do leave the crystal ball to the experts. I really don't know what's going to happen next day. I just have levels, lines on my charts. At the end of the day, whether we go to grab those depends on the powerful moving averages. I only trade what's in front of me and on my charts. Have yourselves a Blue Zone Sunday, and have yourselves a good day, a good night, and good trading for this week starting September 20th, 2015.